Hi, this is Keith Shabby, your friend in the mortgage business, and today we're talking about FHA Seller Concessions. One of the more attractive features of FHA loans is the lack of limitations on seller-paid concessions. When negotiating the purchase of any home, one of the most effective tools to reducing your closing cost of home is using the FHA loan combined with the seller concession. The average home has a total cost of anywhere from 3 to 6% in third-party closing costs. These costs are addressed in the closing cost video. By using HUD FHA guidelines, the average borrower can save thousands of dollars in buyer-paid closing costs by having the seller pay these typical closing fees. Be sure when negotiating your purchase contract that you ask for the closing cost concessions. Most lenders, including FHA HUD-insured loans, will allow up to 6% in seller concessions. With conventional loans, lenders can place limits on the home buyer's ability to ask for seller-paid closing costs. These limits can be reduced to the amount of 3%, or can even completely strip your ability to get any seller concessions at all. If you don't have the funds to cover these costs, you'll most certainly want to ask for these fees to be paid for by the seller when possible. In a buyer's market, you'll always want to ask. The worst case scenario is your contract will be turned down completely. However, in the typical real estate transaction, a seller will simply counter your offer with what they are agreeable to. Your real estate agent can help you with these types of negotiations. Seller-paid concessions can pay the actual costs to close on your home loan purchase up to the percentage agreed to. The third-party fees can cover your prepaid items, which include your homeowner's insurance and your property taxes through the end of the tax year, along with title insurance fees and your lender fees. Below is an example of a closing cost concession example. For example, if you're purchasing a home for $100,000, your typical cost to close would break down to this below. 3.5% down payment, which would be $3,500, 5% closing costs, which would be $5,000. Total cost to close would be $8,500 out of your pocket. By negotiating a closing cost concession into your contract, you can reduce the amount of funds you need to close to just your down payment. This is Keith Shabby, your friend in the mortgage business. Thanks again.